Wall Street is out with its 2026 predictions and the stocks to buy. JP Morgan and Morgan Stanley are both forecasting double-digit returns next year, and Deutsche Bank is beating them all with a call for 8,000 on the S&P 500, up 17% from here. But with multiple stock sell-offs this year and lingering fears over that AI bubble, it's becoming clear that you can't just throw darts at stocks and expect to get rich. Investors are going to have to be picky next year, so I'm updating our list of stocks to buy with 3 totally new picks. More importantly though, I'll also be cutting 3 stocks from my portfolio, 3 stocks I've been buying but am now taking profits. We'll get right into those stocks I'm buying, but first, understand, I wanted to look for new stocks that we haven't talked about for this list, but that doesn't mean I still don't have favorites already in our portfolio. In fact, I always say your best stocks to buy are usually already in your portfolio, and it's that way in mine as well. I'm still buying shares of Super Microcomputer, ticker SMCI, Advanced Micro Devices, AMD, the Ethereum ETFs here, ETH and the ETHA, SoundHound AI, ticker SOUN, CrowdStrike Holdings, CRWD, and Fortinet, FTNT. I'm going to link to some videos in the description below, my analysis for these companies. Make sure you check those out because along with these 3 new stocks, these are my favorite buys for 2026. But then I didn't want this video to be a rehash of those same stocks, so I want to highlight 3 new stocks I'm adding, starting with TOST Inc., ticker TOST, which I have mentioned on the channel before, but it's been a while here, and with the shares down 30% recently, it's a great opportunity in this AI play. What started as a tech solution for restaurants and mobile ordering, checkouts, and waitlists has grown to an end-to-end platform for the industry, from financial to operations and marketing. In fact, JP Morgan recently upgraded the shares, calling Toast the software payments leader. Using this purpose-built software platform, Toast thinks it can disrupt the $1 trillion US restaurant industry and grab a first-mover advantage into over 875,000 restaurants, where it already has a strong foothold, with 13% of that market. Now for each of these stocks, I'm going to be looking through the growth estimates as well as the valuation, kind of give you an idea of where we're looking at here. With Toast, we see that 20% revenue growth expected this year and next, that above 20% revenue growth that we like to see with all these growth stocks to buy. More importantly though, we want to look at earnings growth as well. Here among 16 analysts covering this stock, we see earnings are expected to double this year from 54 cents last year to $1 per share this year, then to $1.25 next year. So very strong earnings growth that is going to take these shares higher. Looking at the valuation measures here, we like to look at the price to sales. Again, that is the price investors are paying for every dollar in sales generated by the company. So right now, $3.77 investors are paying for every dollar in sales generated or booked by the company over the last year. Okay, we put on top of that 20% sales growth each year, and these shares get cheaper and cheaper. We can see right now at 3.77 times price to sales ratio, this is under what the stock has been trading at in the past. Been trading as high as 5 times price to sales in the past. So what we can say is right now, relative to where the stock has traded in the past, these shares are cheaper by quite a bit, 3.7 times price to sales. Now, as much as I like Toast going into 2026, there are other deals in artificial intelligence stocks that you do not want to miss. So I'm going to link to a video in the description, a full list of 65 stocks in this theme, including their growth and valuation. So make sure you check that out next. On to our first stock to sell though, and nation, sometimes you just have to cut your losses when news changes around your stocks. I started adding shares of the Trade Desk, ticker TTD, in March of this year after a big earnings disappointment. The advertising tech company is a leader in its direct selling platform, or DSP, and some of the best analytics in advertising. That digital ads market is a giant growth opportunity, from just $135 billion into the $160 billion TV market and $900 billion spent on global advertising. That sell-off in February was on fear of competition from Amazon and Trade Desk DSP and connected TV leadership, and it looked like those fears were unfounded when the company reported second quarter earnings, sending the stock higher by almost 50% on that news. But then the third quarter earnings brought all that back and the stock plunged. I was thinking we get a repeat of that earlier performance where Trade Desk comes out with very good earnings, showing that those competition fears are unfounded, and we see the stock jump up again. Unfortunately, since then, Amazon has doubled down with not only a deal to show ads on Netflix announced in September, more recently, offering free head-to-head testing of ads against other DSPs, basically going to advertisers and saying that they'll offer free ad testing against the Trade Desk platform. Now, the company is still expected to post solid revenue growth of 18% this year, and last quarter's report did look good. TTD has been my biggest loser by far, down 33% on my cost basis. I think a rebound to $45 is possible ahead of the next earnings report in February, and if the earnings hold up, this one could jump right back to 70s again, but there is just too much risk. Amazon is coming in with all its guns here, and TTD is just outmatched on that. Fortunately, the rest of the stocks this year have boomed higher, so I can use that capital loss on TTD to offset my taxes for the year. And Nation, there are a couple of very important points here. Reasons to sell a stock that will not only lock in your profits or keep you from losing more money, but also help you in other ways. That's because, remember, other than dividend stocks, you haven't made any money on a stock until you sell it. While I like to hold my favorites for at least a few years or even longer, don't think every stock has to be a forever investment. Know what the company is worth and don't be afraid to take those profits when it gets expensive. Even more important though, don't be afraid to admit you were wrong on a stock. Investors hold tight to their losers like it's their firstborn, but sometimes you just gotta cut them loose. Like with that investment in Trade Desk, sometimes new information comes out that changes the outlook. The shares may still rebound, but that risk is now higher. And then a third reason to sell here, when you can use that money somewhere else for a better return. Taking that short-term loss on shares of Trade Desk saved me over $30,000 on taxes at our tax bracket and frees up that $193,000 to invest in some of these other stocks. Back to the stocks I am buying though, and Meta Platforms, ticker META, isn't exactly an undiscovered gem, but the market doesn't realize what kind of dominance this company is about to have and what it means to the stock price. Not only does Meta own 3 of the top 4 most popular social networks, that's Facebook, WhatsApp, and Instagram, with more than half the world's population logging in regularly, but it's about to leverage that control into massive changes to advertising and consumer electronics. I highlighted an interview back in May where Zuckerberg outlined his plans to basically take over the trillion-dollar advertising market. Meta is putting in place a system that businesses can just describe their product and a goal, and Meta is going to use AI to design an endless amount of ads for testing and optimization. Zuckerberg even says here, we're going to get to a point where you're a business, you come to us, you tell us what your objective is, you connect to your bank account. You don't even need a creative. That's no ads, no text, no graphics, anything. Meta is going to put the entire advertising world out of business and collect hundreds of billions of dollars in the process. Just as big, though, could be Meta's move into consumer electronics with its AI glasses. Zuckerberg has been spending aggressively for years to develop some kind of a consumer product, first with its Oculus headset, and now with the Ray-Ban glasses that could finally be the company's cash cow. Just think about this. If Meta can be the first to market with a workable AI consumer electronics device, leveraging the billions on its social network users, this could be for Meta what the iPhone did for Apple, which has booked over $2 trillion in revenue since that 2007 launch, now 66% of its total sales. That growth would be huge here and way over the 21 or 18% sales growth expected for this year and next. Even that though, to 200 billion, 235 billion expected next year. Here we see in the earnings estimate, we do see some of the weakness in some of these hyperscalers and AI stocks right now is that $23.86 reported in earnings per share last year, only $23.17 expected this year. That is because these companies are spending so aggressively on research and development, on those AI infrastructure buildouts, on marketing, on all of this idea that they're really eating away at their profit growth. Okay, so 21% revenue expected growing this year, but flat earnings growth over the last year. We can see, though, that over the next year, expected almost 50% growth in its earnings per share to $30 per share. On that kind of revenue growth, and especially on next year's expected earnings growth, shares here are not expensive at about 8.8 times on a price to sales basis. You can see here, looking over the last year, shares have traded as high as 11 times price to sales, but also as low as about 9 times price to sales here. So right now, shares are trading at about their lowest on a price to sales valuation as they have been over the last year. A very good deal here on that growth, especially if you factor in the potential growth on not just the advertising, but the meta glasses as well. Price to earnings a little bit higher here, 28 times, just because of that lower earnings growth that we are seeing this year with all that spending. Next year, though, those earnings jump 50%, and we see this PE ratio come way down. Now, a lot of the near-term potential on Meta and really the entire stock market rests on a continued growth in that AI theme. And I know a lot of you out there are worried, seeing the short sellers come out warning about a crash. So I'm also going to be linking in the description to a video proving we still have at least 12 to 18 months left in this AI bull market. Now, it is a longer video, but you need to watch this so you don't get freaked out when the market has one of those little corrections and the stocks sell off. Look for that video in the description below and check that out. Next, though, I'm also taking profits and selling shares of Advanced Auto Parts, ticker AAP. Now, I'm up 41% on the stock and was right that an activist investor pressure would help push it higher, but I was hoping for a bigger return with a full buyout of the company from private equity. While it is still possible the company gets that takeover offer on its very cheap valuation here, at just 0.37 times price to sales, and send this stock higher, the shares have pretty much flatlined around $50 each right now. You might be able to get a rebound to $60, but anything more than that is going to take that major news event, and I think your money can be better used somewhere else. One of my favorite themes over the next year, though, is the coming era of stablecoins and tokenizations. But I know a lot of you don't want the constant ups and downs of that direct exposure in Ethereum ETFs like the ETHA or the ETHE. At one point up 260% this year, only to fall 45% in November. That's why I'm also adding shares of a safer way to play this, the Amplify Blockchain Technology ETF, the ticker BLOK. You can go to the fund's website and see that it holds 54 stocks in this theme, and 80% of assets invested in securities or stocks of companies actively involved in the development and utilization of the blockchain's technology. We can scroll down here and see the actual industry allocation, so the parts of the blockchain industry that's investing in. We can see here it's about 30% in the platforms. So you've got the Coinbase, you've got the Robinhood platforms that make a lot of these available to investors. You've got the miners, you've got the Riot, the Hut 8 miners that are mining these cryptocurrencies, applications, the key elements here that are going to make the cryptocurrencies into stable coins, into tokenization, things like that. You've got direct exposure, 12% directly in the coins themselves through this ETF, and then venture companies that you might not be able to invest in except through ETFs like this. Okay, so private companies. You can see a description of each of the industry segments here that it is investing in. Or we can go up and see the actual holdings, the 54 stocks held in this blockchain technology ETF here. Of course, again, you've got the platforms like Robinhood Markets, like Coinbase here. You've also got the miners like CleanSpark, like Hut 8. You've also got the treasury companies like Bed Bath & Beyond. You've got PayPal Holdings, which has its own stablecoins. All of these in some way related to that cryptocurrency stablecoin tokenization theme. You've got some of these that are only really tangential to that theme, international business machines. You've got some of the exchanges here. You've got BlackRock, world's largest asset manager that is heavily or aggressively moving cryptocurrencies and these things like tokenization into its process. You've got the CME Group, the exchange, which sells futures contracts on those. So 54 companies, 54 stocks within this industry that is not only going to give you an exposure to that growth in the cryptocurrencies and the blockchain technology, but it's also going to smooth out some of the ups and downs there. Okay, when some of these companies like Bed Bath & Beyond, like Hut 8 and Galaxy Digital just crash along with cryptocurrencies, this ETF isn't going to crash along with it because it's got some of those safer names like BlackRock, like CME Group, like Mercado Libre and Block. Nation, cryptocurrencies, and even more so those stable coins and the tokenization are now an unstoppable force that will change finance. This is going to eat the entire financial system. And even longtime skeptic Larry Fink, CEO of, again, the world's largest asset manager there at BlackRock, is now saying this will revolutionize investing, with every stock, every bond, every asset being tokenized. I want to get to that third stock I'm selling, but check out the video in the corner here, or I'll link to it in the description explaining how big that stablecoin and the tokenization opportunity could get. I'm going to walk you through why this is going to happen and then highlight the best stocks in that theme. The third stock I'm selling into 2026 is a twofer. Medicare Advantage insurance leaders United Health Group, ticker UNH, and Humana, ticker HUM. Now, I added Humana late last year and into this year on the idea that a more favorable government to the health insurers would help boost them from multi-year lows. I picked up UNH after the giant drop this year, and both have seen some strength. I am up 33% on the shares of UNH and almost break even on Humana, though the shares were up as much as 20% at one point, but have come back down since then. I still believe there is some untapped value here in these. Humana is expected to post solid 10% revenue growth and is still trading for just 0.25 times on that price to sales basis, which is ridiculously cheap. But health insurers are just too much of a political football, which may limit their returns going into these midterm elections. So I'm going to take profits here and reallocate the money where it can grow faster. Don't miss the video to the right here and proof that the AI stocks theme still has 12 to 18 months left to run. Or look in the description for those other videos. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.